Welcome to Keep What You Earn, your judgment and jargon free zone for entrepreneurs of all levels. Get ready to learn how to scale your business, save money in taxes, and create a business that grows your wealth. If it feels like the financial side of business is like eating your vegetables, well, then think of this podcast as the ranch dressing to make the process a little more enjoyable. My name is Shannon Weinstein. I'm a CPA and business owner on a mission to simplify money and empower others through knowledge. I hope this episode inspires you to take action, but remember that the information we share is for educational purposes only and is not individual tax advice. Now that we got that out of the way, let's start the show. So lately, I've heard a lot of entrepreneurs asking questions around tax savings and tax planning for the end of the year. And one of the things that has come up for me more recently is this sort of mindset shift when it comes to tax savings, contrary to what I used to believe and what I used to also share, even on this show, even to my clients. My perspective has changed. And it's something that I've seen develop as I work with more entrepreneurs that are growing, scaling, expanding. And I see for myself as well as a business owner, you know, where this falls in my own priority list. And it doesn't feel right that if I am teaching tax savings and tax strategy as a component of what I do, that if I'm not also doing those things, I really had to unpack, why am I not doing these things? Why am I not doing what I'm doing with my clients? Why am I going, it's not worth it? It's for myself. And then I realized that for many of my clients, that may be true as well. And a lot of tax savings and a lot of tax strategies are legitimate, are great, but there's so much more to it than applying some type of trick or strategy or hack. It's my firm belief that anything in business, anything in life that is worthy of achieving and that is long lasting, it doesn't come quick, and it doesn't come through a hack, and it doesn't come through a shortcut. You may get a result from these shortcuts. You may get, results from the hacks, but are they long lasting? Are they long living? Probably not. It's probably riding the wave of a trend. It's probably related to some type of circumstance or the market or something, right? You're timing the market, if you will, in business by adapting into these habits of hacking and, short-term thinking. And what I realized was that when a lot of people are asking, and I was listening, but as a lot of people are asking for tax saving strategies, what I realized was that's not actually what they needed, even though that's what they were asking for. And let's talk about this. Why do we have this pain point that we feel like we need tax saving strategy? We need to save money in taxes because we feel like we're paying too much. And I agree. I agree with that. I am not an IRS fan. I think the IRS is full of wonderful people who work there that I have had the enjoyment of working with on my clients. Like, they're a necessary thing that exists. Like, the IRS is there to make sure everyone's paying their fair share in taxes. I have no problem with the IRS. It's more so the tax code, the tax law, and our government and how they're spending our tax money. I'm not a huge fan of. That's not the topic of the episode, but that's more, I think when you can identify that we don't really have a problem with the IRS, they're just the bearers of bad news, they're just the delivery drivers, then you realize, "Oh, actually, yeah, that kinda makes sense." They're just here to enforce what Congress is telling them to do. Anywho, the pain point I find when we're dealing with taxes is not necessarily the magnitude of how much you owe, it's oftentimes the surprise, and I realized that the pain point that tends to present itself, you feel like it's, "Oh my god, I owed so much in taxes last year, and I don't wanna do that again." But I feel like if you had and if you experienced this, I would bet most likely you had no more than a month's notice on how much you were gonna owe. And maybe if you weren't saving up during the course of the year and you weren't held accountable to that savings, then you were in a position where you had this surprise bill, and it strained you, and it stressed you out, and that's valid. But hear me out. What if we just started with eliminating the surprise component of the surprise tax bill? What if we started with going back to August, September even after Q3, going to your accountant and saying, "Hey, I wanna do a sort of mock tax return of this year after we've done through Q3. Like, where are we at? Like, what am I gonna owe?" Give yourself an extra 3 months to plan and to save and give yourself a range of what you might owe. Now, we do this with every client that works with us as CFO. This is a staple of what we do because we do not like the surprises. Actually, this happened last year. We had our whole client roster and we were ready for tax season. We did pro formas, and around August, September, we reached out to every client and said, "Hey, you're gonna owe between roughly X and Y." And those ranges, by the way, were not like super tight. It wasn't like, oh, $30,000 and $30,500 and $31,000. It wasn't within that type of zone. It was more like, "Hey, you're gonna owe between 35 and 45K. Just heads up." Honestly, that alone, having a ballpark range, having a ring of the bullseye that you know that you're aiming for, and you're saying, "Okay, cool. I only have 20K saved up. That means I need to save up another few thousand a month from now until the deadline. Thanks, Shannon. Cool. 10-4, roger that." That's what I'm saying is that if you knew a range of what you're gonna owe and you round it up. So let's say I told you it's gonna be between 35 and $40,000 this year. I'd say, "You know what? Aim to save 50 and let's see what happens." And if you oversave, go treat yourself. Go do something and go buy that thing, go hire that person, and give yourself a little bit of that grace and a little bit of that reward by accelerating a new goal that you had because it wasn't going to go to taxes. So I think we have to start with eliminating the surprise, number 1. Number 2 is I'm not an advocate for not tax planning. I'm not an advocate for just accepting what you owe and being on the side of the IRS. However, I do want to make sure that you understand that tax strategy, primarily, I'd say the majority of tax strategy exists for the individual level of your taxes, meaning the majority of actual strategy of actual, what we call loopholes or what we call tactics that we can use to get to lower your tax liability. A lot of those reside in areas like real estate, like capital gains, right? And certain investment strategies. A lot of those rely on the individual to be pretty savvy and to be into some of these alternative investments or into some of these different areas. For a business owner who's simply earning income from their business, let's just strip away all those other things for a second. When it really comes down to tax strategy, there are a couple of core strategies that you can implement. I've talked about them on this show. And the issue I have with these strategies, the only issue I have, because I really do love them. I think they're great. However, there are a lot of people who are implementing them because they're hearing about them on TikTok or social media or whatever, or people like me, and they're hearing about these strategies and they're saying, "I want to go do this." Well, here's the thing though. Let's be real. Let's be honest with ourselves for a second. And I just used this example earlier today with a client. And I said, "Okay, listen, you want to hire your kids in your business because that's going to save you money in taxes." Let's break it down. Let's just say that for all intents and purposes, the maximum deduction that you can take in your business by hiring your child, let's just say that they're earning the maximum income they can. They're a teenager. They have the capacity to earn this money, right? Hey, real quick, are you learning anything in this episode that you think is share worthy? Well, if you could take a quick screenshot and share any of your biggest takeaways or quotes from this episode, post it to Instagram and make sure to tag me at Shannon K. Weinstein and at Keep What You Earn. Thank you so much for listening to the show. Let's dive back in. If they have the capacity to earn this money, what you want to do is you do the math and say, okay, $14,000 ish, right? This changes every year, by the way, this amount, but let's just say it's around $14,000 to do some easy math. So $14,000 of a deduction means that let's just say you have an effective tax rate of about 20%. Like your tax rate on average is about 20%. If you're paying 20% in taxes and you're going to save 14 grand of deductions, by simple math, and I know a lot more goes into this, but by simple math, napkin math, that's $2,800 that you're gonna save. Now, saving 2,800 bucks, it's like, Shannon, why the hell wouldn't I wanna save 2,800 bucks? I'll tell you why. Because that strategy involves If you don't already have this set in place, you're going to have to set up a payroll system. You're going to have to run payroll for your child. You're going to have them do a timesheet or some type of activity log. You're going to have to produce a job description. You're going to have an employment agreement. You're going to have all the paperwork that it takes to have a real employee because your kid is supposed to be a real employee. You're going to have to file a W-2 for them every year. You're going to have to, file their taxes potentially as their child. So what I'm saying is all of these responsibilities get added on when you take the strategy. And if you think about it, this could take someone a few hours a month between tracking everything, running payroll, and so on. And let's just say it were to take you 2 hours a month, or we'll blend it into a half hour a week. Here's my question. For $2,800 a year maximum, you could do that. Or if you had a half an hour a week, even a half hour, and you just made cold calls, right? Or you just called former clients and asked to repurchase. If you wrote a few emails, if posted a few things on social, whatever that looks like for you. If you made a new ad with that time, could you make more than 2,800 bucks? Probably. So what I'm getting at, and more recently I'm focused on, is I love tax saving strategies, but are they worth the time, effort, money, and energy that you're pouring into implementing them? Because oftentimes I find they're honestly not. There are a few that are. I think the S corporation, like your structural changes, is 100% worth it. I think examining your business's structure and how you transact money and buttoning up the right contracts and the right transactions, that's worth your time. What I think is tricky is something like the Augusta rule can be tricky. Something like hiring your kids can be tricky. They are often worth it when you have the time, like when you have time to spare and when you feel like you can implement these things. When you're already strapped for time, this is going to be difficult. This is going to be something else added to your plate. And I wouldn't want you implementing something that you couldn't back up with evidence. Like if you can't implement this, if you don't have the time to make the job descriptions and make all the stuff for your, hiring your kid, then I would say then don't do it because that's the cost of the savings. That's what you get in exchange. Nothing comes free. So you're going to have to make some type of effort. And I go back to this point I made earlier of a lot of these tax saving strategies really reside at the individual level because for a business, if we're just talking about the business and we say, I want to lower my business profit by using tax saving strategies, unless you have something like depreciation or amortization, which is basically the conceptual decline in value without any actual money leaving your bank account, the decline in value of your assets. Unless you have something like that will help you reduce your taxable income, the only thing you can really do is try to maximize as much as you can the expense deductions that you're taking. And here's the kicker. You have to do this. There's a little asterisk next to it that says minimize the number or maximize the number of deductions, but don't spend any new money. We're going to try not to spend any new money that weren't already going to spend. Because here's the other part of that. If you know that you can deduct, say, I don't know, let's just say you're a fitness business and you realize that you can deduct your fitness equipment. You're going to go out and buy like a whole home gym so you can film content in there. Fine. And you're just going to keep adding pieces to the gym as you go. And you're going to be saying, okay, I'm going to add more weights. I'm going to add more yoga mats. I'm going to add more whatever. And you're going to keep building out this gym because you realize that, hey, if I spend all of my profit on equipment or on tools or on supplies, I don't have to pay taxes because I have zero profit. And it's like, that is correct. However, you also have zero money if you're spending all of your money on new things. So, what you have to do is optimize for this and you have to find expenses you're already spending your funds on. Maybe they're personal, right? So now we're talking about, are we claiming the home office deduction properly? Are we taking advantage of vehicle expenses? Are we taking advantage of certain things that could be construed as business related? I'll give you an example. I had a client that had subscribed to a bunch of streaming services, right? And she was a fitness client. She was a fitness instructor. She subscribed to, like, Daily Burn and a few other things like Les Mills and Zumba and other things, and she was doing it for content inspiration or ideas, and she was taking notes on some of the choreography. Now she wasn't copying it, but she was probably noting some of the verbal cueing or noting the points of inflection or the pace of verbal cueing, things like that. So she was trying to learn from the professional instructors in the video, and she realized that the fastest way to do that was to download some type of streaming and just search for videos. Now I say that to go, okay, at first glance, it looks like this is personal. If I say YouTube TV is a business expense deduction, that like most of your accountants are going to roll their eyes and be like, huh, yeah, whatever. Actually, if you can argue that it furthers your education, it furthers your business, you can probably argue that some of these are true. Now, it's up to you and your tolerance of risk and your accountants, but I think that there could be a case made that as long as you have the notes, as long as you have taken notes on this, it's no different than continuing education and training for some people. So, especially when you're cooped up at home, like we were during the pandemic and you couldn't go to, fitness certification trainings in person, this was one of the next best things you could do. So, it should have become more of a habit, more of a commonplace thing to do. And I use that as an example to say, look at your personal expenses that are currently personal and really give yourself a good, once over from that perspective and see if there's anything that you might be missing out on. And the biggest thing is, yes, minimize your taxes by maximizing your deductions, but not at the cost of your own peace, not at the cost of your energy, not at the cost of really a lot of your time. Because I'm telling you right now that 90% of the time when it comes to tax strategies, and I'll carve out besides like the S Corp and a few other things, 90% of the time when it comes to tax strategies with your business, it is not worth the time to implement. And you're going to hear tax advisors say you can do all of these different crazy things. You have to ask yourself and ask them, what will it take for me to implement this? How long will it take me to implement this? What will be required of me to do this successfully where I can defend this in an audit? Because what you'll realize is by the time you get to that point where you've identified that, you're going to go, you know what? With that time that I need to be spending weekly, monthly, and so on, I could make way more money than I'm going to save by doing this. Always ask yourself those questions. Could I make more instead of save more? And honestly, that's a better skill to put reps in on. I would rather get on 10 sales calls than learn about one new tax strategy because those 10 sales calls are going to teach me skills I can use for the next 10 and the next 10 and the next 10. And I'm going to become a better salesperson as a result of it. And therefore, I'm going to close more sales and I'm going to make more money. But if I learn better tactics on how to save money, look smaller, shrink myself, that can only go so far. And there is going to be a cap on that. So, as opposed to shrinking yourself, as opposed to trying to save your way to wealth. My argument is prioritize earning and then as a lower priority, once you have prioritized earning through profitability, through cash flow, through customer value, then you should come down to now let's talk about taxes because now I have a cash flowing high customer value business and I'm ready to maximize my tax savings. That is when you talk about it. When you have a viable business that is humming along and that you can really talk about tax savings. Other than that, you know, definitely take advantage of tax strategies on a personal level or with real estate or with other things that you hear about here. But when it comes to your business, it really just comes down to making a profit and trying your best to optimize how you're set up structurally for tax purposes and it also comes down to where you live. So I'm not saying move anywhere for tax purposes. It should just be secondary. But at the end of the day, what matters is that you are doing the activities that you want to be doing and that it's worthwhile to you. We realize that CFO services may not necessarily be accessible to everybody. And that's why we have packaged our CFO services into a power session for you. With this single purchase session, you'll be able to navigate the financial scorecard with me personally on your business and figure out what constraint you need to unlock next. We're going to give you direction, clarity, and we're going to find ways to increase your profitability, increase your cash flow, and make sure you never run out of money. Okay, if you're interested in booking a power session with me, I only do a couple per month, so make sure you jump on quickly and sign up. Check the link in the
Okay.
show notes for more information. I can't wait to see you in a power
Mm.
session. Thank you so much for listening. If you enjoyed this episode, please leave a rating and review on your podcast platform. This small action goes a long way for podcasters to get our message heard by more business owners just like you. Be sure to check out the show notes for links to information about our guests and ways to get in touch with me. We'll see you on the next episode.